Morningstar Financial, they made a bold call. It was kind of cool. They said rates will average 4% in 2025. Well, that means if they're averaging 4%, that means some of it had to have been 3 and some of it might have been 5 to get the average of 4 in the middle. Bold prediction. I don't believe that we're going to get there, but there's some people now calling for even lower rates. What does this mean for us today, and what does this mean for home prices? Traditionally speaking, when we look throughout the Seattle metro, matter of fact, this happens for the whole United States, the market appreciates basically through the spring market. So understand that by June, the market generally speaking stops appreciating and sometimes has a slight depreciation towards the end of the year. So let's think about this. Let's put on our buyer hat. Let's put on our investor hat and be like, okay, where's the opportunity? Are rates going to be higher this fall and winter?
Yes.
Are we going to have some possible negative economic news and political news?
Potentially, yes.
We're going into what could potentially be a slightly colder winter. Now, when I say colder, I'm not talking temperature. I'm talking the real estate market. So I want you to put on your opportunity hat. If you're that buyer who's been making offers and losing out, this next 6 months is going to be that opportunity. If you're that investor who is looking to go in, short term or even long term, now is the time to start hunting and getting ready to make offers. And most good offers come from follow up over a long period of time, not initially the first one. But if I was to say, where's the window of opportunity it's coming right then, because we just have market uncertainty. We know the rates are going to be higher, whether they move up or stay flat. We know they're higher, and market uncertainty, and then you're going into an election year. That's a recipe for deals. Okay, magic recipe for deals. So be looking, get my credit ready, get my cash ready, get my lending ready, and start hunting today, because it may take you 90 days to find that deal. Now, of course, I also think this is going to extend into first quarter and probably second quarter. But I believe by second quarter of 24, the Fed is going to start to scoot rates down, because what they are showing is inflation is coming down. It's just not coming down as fast as everyone wants to. So we're starting to beat it, but don't get euphoric over these inflation headlines that, oh my goodness, we're hitting CPI in the 3%. The Fed has made it very clear that their long-term target is 2. And the Fed has said, we don't believe we'll get there until 2025. They're telling you where they're going. Now, it doesn't mean that rates will be extremely restrictive during that whole timeline. So when I say prices may drop, once again, I think our mindset and our emotion goes to the Great Recession. And we think 10%, 20%. I'm saying 2, 1. And most of the United States, and definitely the Seattle metro, is going to end up, if anything happens, just slightly less than where they were a couple weeks ago in June. Don't expect it to all go away. Now, like we talked about before, if interest rates go to 8, 8.5, these bets are off. That will cause price compression.
Opportunity, though.
Massive opportunity. So it's really weird. As an investor or just a regular home buyer, you get so emotionally wrapped up in this. If rates were 10, would it create good deals? Absolutely. So ignore that and just focus on your buy box and say, does this match my criteria, my goals, and can we afford to do it, and do we have prudent reserves? And if the answer is yes, go make it happen.